I'd like everyone to think of the financial services company that they use the most. Now, I'm not going to cold call anyone, but because we're in Vegas, I'm going to take a bet that most of you thought of a name that's on this slide. It's because you probably thought of your bank or your credit card. And for the mainstream financial services industry, it's fairly concentrated. There's thousands of banks in the US, but the top 5 make up 50% of the assets. Credit cards is even more concentrated. It might surprise you to learn that 50% of the American population would come up with an entirely different set of names. And that's because they think of cash checking or prepaid debit cards, remittances, payday loans, and come up with names like Check and Go or Mr. Payroll or maybe MoneyGram. And we're going to talk today about how we're in an interesting inflection point of many entrepreneurs coming in to make the lives of tens of millions of Americans and many more worldwide much better from a financial services point of view. But from a venture capital perspective, how there's also now an opportunity to fund the next billion-dollar financial services company. There's a common misperception in this alternative financial services world that this is a small space. And that's often because these stores are in strip malls, they look fairly tiny, but that would be wrong. Last year alone, there were $320 billion in transactions that went through services like check cashing. This is $1 or $2 a check, $58 billion. Money orders, payday loans. The second misperception is that it's mostly minimum wage workers that use these services. And as you can see on the right, yes, more than 25% of those making $15,000 use them, but those well over the median income also use many of these services. There's lots of companies in this space, but if you talk to consumers, they're not serving them particularly well. You've likely heard this expression, it's expensive to be poor. Put some numbers around. Of the $1.6 trillion in financial services last year, there was almost $150 million in fees. So this is the equivalent of you having $100,000 in your bank account. At the end of the year, you find out that your bank has charged you $10,000. You'd be outraged. You'd switch services. For a large swath of the population, they need financial services more. They have fewer options, and they're more expensive. Let's bring this to life a little bit more. Meet Alice. Alice, like hundreds of thousands of Americans, works at McDonald's. McDonald's is the second largest employer of minimum wage workers after Walmart. Walmart, like McDonald's, like many other employers, have realized that paying minimum wage can support workers, but it results in a very tight budget. So some of them had partnered with the National Debt Relief to come up with a sample budget to help their workers. And we have it up here. Take a look. At first glance, it might seem reasonable. You've got revenue, you've got your bunch of expenses, but let's dig in a little bit further. Start with the revenue lines. Minimum wage across much of the United States is between $7 and $8. 40 hours a week, that's actually that first $1,000 line. So right off the bat, many employers in their baseline budget are assuming that someone like Alice works 2 jobs, 80 hours a week at minimum wage. Now let's go into the monthly expenses. Second down line, rent. You could find rent for $600, but the national average is actually $1,000. So already you're presuming that someone is going to find extra cheap housing just to make ends meet. There's a line in there for car payment, but there's no line for gas. The average American spends $250. And then if you go all the way down to the daily monthly spending, you're expecting someone to live on $25 a day when it doesn't include expenses like childcare and a variety of other things. The point here is not to pick apart the specific budget, but just to show how tight life is if you're living on 2 minimum wage jobs and even a higher income, and how there's not a lot of room for something like high financial services fees. So now we're going to dig in a little bit to the 5 key pain points that much of the population finds. And more excitingly, what are some of the companies that are coming in to solve these? First, shift work. As you can imagine, not that predictable, results in lumpy income. If your income is lumpy, it's going to be extra difficult to save. And as we'll see, many Americans have no savings at all. Now, luckily, there are trillions of dollars spent on government services, but there's also a lot of room for improvement here to make that money go further. And then let's talk about debt. 2 barbells. On the one hand, Americans are saddled with way too much debt, and it can be insurmountable to get out. On the other hand, there's tens of millions of Americans who can't even get reasonably priced credit. Let's start with our first problem, lumpy income. Here on the x-axis, we have annual income, starting at $15,000 all the way up to $300,000. Let's look at how this would work for Alice. Let's say 1 week, she only works 40 hours a week. She'd bring in $15,000, or about $1,000 a month. You can see here that that could sway by 60%. So on a great week, she brings in $1,600. No problem, she pays her rent. On a down week, she brings in $400. She can't even pay her bills. Imagine trying to make your monthly income work with swings that are that volatile. This is not just a problem at the low end. It's also a problem at the median income and even beyond. Swings of up to 30%. This challenge in revenue creates huge challenges downstream in just making your month work across the math. So let's look at a startup that we invested in that helps to solve this problem, Earnin. The second piece that exacerbates the lumpy income is that payroll cycles are locked. You get paid on the first of the month, you get paid on the 15th of the month. It's likely that we don't think this much about it, but if you're like most of the population that lives paycheck to paycheck, this is a really big deal. Back to Alice. First of the month, she gets her income. She pays her rent, her car, her cell, her food. She feels like she's fine until the 15th. But on the end of the month, she's driving to work. She blows a flat tire. It's going to be $300 to fix her car to enable her to get to her job. What does she do? She doesn't have $300. If she's like many Americans, she'll take a payday loan. And she's lucky that that's available. The challenge is she's probably paying $15 for every $100 that she borrows. It's pretty tight to fit in that budget that we just saw. So enter a company like Earnin. And what they've been able to do is by linking to Alice's bank account and using other signals like how much time has Alice spent at McDonald's over the last 8 days, they can actually front Alice the money that she's earned over the 8 days that she's worked at McDonald's. She's able to pay off her car bill, make it to the 15th of the month, and then she can pay back Earnin and save herself from taking a high interest payday loan. And what's particularly interesting about Earnin is that they found that their consumers are so used to feeling gouged by many of the services out there that they voluntarily choose to tip Earnin, which provides Earnin with a very good revenue stream and a much better experience for Alice. So that's lumpy income. Let's look at savings. Here, and you've probably seen this stat because it's one of the more staggering ones out there, 46% of Americans can't even pay a $400 emergency bill. Think of the last time you spent $400 and didn't even think about it. There's a variety of startups that are coming in to help this. And ideally, everyone would just make more money. That would make it easier. But there's a lot of things that you can do to just help the budgeting go further. There's companies like Digit, where you can say, great, for every $1.50 coffee that you've spent, let's round up the 50 cents and put that into a savings account. And that doesn't sound that significant, but when we're talking about a few $100s over the course of a year, that can actually be very helpful. We're going to talk a lot about machine learning throughout this conference. And there's many companies now like Empower, which will be able to take months of your spending and payment data and just help you better understand exactly how much you can spend over the course of the month. Now, savings and budgeting doesn't solve everything. Another big challenge of not having savings is that purchases that you might be able to afford if the payments were spread out become insurmountable if they've got a large upfront payment. What's one thing you're never going to leave home without? Probably said, your cell phone. Prices have come down significantly, but they still cost several $100s, which creates a big challenge if you don't have that upfront payment. Enter a company like PayJoy. What they've done is that it's a team that took a technique that they discovered in Africa. PayJoy is a team of ex-Google engineers, and they started in Africa financing solar panels. And what they found is that they didn't need to create a credit score. All they needed to do was install a piece of software on the solar panel, such that when a user stopped paying, they could just shut off the power from the solar panel. Very effective in increasing repayment rates. So come back to the US, they work with a variety of Android models and they pre-install their software. They do a simple identity check on a lot of the population that doesn't have credit, and they're able to finance out these cell phones. So imagine making months of payments and then suddenly stopping. You can still see your emails and your text messages coming in, but you can't reply because you haven't paid your bill. Very effective in upping the payment rates. There's a more simple case in bus pass financing. A lot of people take the transit every single day. They could save a lot of money if they just paid the monthly pass rate, but they don't have that money up front. There's a company like Token Transit, which is helping to spread that over the course of a month and enable people to buy the monthly bus pass, but in installments versus this lump fee. There's the second pain point. Let's look at the third, government services. Trillions of dollars a year. You're probably most familiar with Social Security, Medicare. There's a very large program we'll talk about, which is the SNAP program, the Supplemental Nutrition Assistance Program, better known as food stamps. This is much larger than you might think. $70 billion, 40 million people in the US are on food stamps. 1 in 7 households. Alice is on food stamps. Let's come back to her user experience. She's mailed a physical card, and every month the government loads balance onto it. And here's her grocery shopping. She shops throughout the month. She hits about the third week, and she's in the grocery store. She's got a cart full of groceries, and she starts to think, actually, I don't know how much is left on my cart. So then she calls the 1-800 number, and they tell her. And now she's doing mental math with her kids in tow, standing in the grocery line between how much money she has on her card and can she afford what's in her basket. I can't think of a much more humiliating experience of trying to make that work on a monthly basis. One of the more exciting companies that we have, and you're going to hear from later, is called Propel. And what they've done is they've enabled someone like Alice to load their monthly card into their app. And Propel will show Alice not only how much money she has, but how to budget throughout the month and which grocery store she can shop at to make her money go further. Now let's talk about debt. Here's a depressing statistic. We've hit pre-crisis levels of credit card debt. Americans owe $1 trillion. So for households that have this kind of debt, they're paying $2,500 a year. If we come back to that budget, there's not a lot of room for it, and it sounds pretty insurmountable. So if I'm sitting on $2,500 of debt, what do I do? There's a variety of different solutions that have come into this space. At the most basic level, if I have credit card debt, I probably don't just have one credit card debt. I owe across a few different cards. I might have other types of loans, charging various different interest rates, due at different times. There's startups like EarnUp, which are helping me better understand how to pay which debt and when. If I haven't paid my debt in 180 days, which I discovered after I accidentally didn't return a cable box back in college, I'm going to start getting calls. Yes, this is a regulated space, but debt collection has got some pretty unscrupulous actors that will just start calling 15 times a day. And the collection rates aren't that good. They're usually 1 or 2%. So now there's companies like TrueAccord that can look at a much broader base of customer data, and they can understand, hey, you're on Facebook most of the time. Here are some different angles about your life. Here's some better messages that I could approach you with, not only increase repayment rates, but just to make the whole experience much more humane. Third, there's a large part of the population that just wouldn't be able to pay what they owe. And if I'm a bank and I have 100,000 people that owe me $10,000, I would probably be fine accepting $5,000 from some of them versus zero. But I can't go out and advertise that I will just accept $5,000 instead of $10,000, or even the people that would pay $10,000 won't pay me. So now there's a class of startups like LendStreet, which are partnering with banks to run analysis over the income stream of much of their customers so that banks can better understand, yes, I should go after you for $10,000. I should partner with you to get $5,000, and you're probably going to have to declare bankruptcy. So that's too much debt. Let's look at the other side of this. Lack of credit. By some estimates, there are 90 million Americans that are mispriced. There's a smaller number, but still significant, that are completely out of the system. So credit invisible, this could be Alice. Because ironically, you have to use credit in order to have a credit score. And there's the thin file. This is me when I was coming from Canada, or any immigrants, or a variety of students that just haven't built a credit score. So as you can see, it's not just low income. It spans the spectrum of income in terms of people that are not in the system. And this can create a big financial challenge. But here's where some of the more exciting startups are. So there's a company, LendUp, and they use a lot of the traditional signals. But because there's often not enough, they've augmented themselves with things like behavioral data. And so LendUp will take the data to see how long do I take to slide my slider from $150 to $200. And the time of consideration there has actually been shown to be indicative of how good a credit score someone could be. Or there's a company, Nova, which is connecting credit bureaus all around the world, such that if you came here from India or from Mexico, you'd actually be able to port your credit score and start at a much better basis than if you were starting from zero. So let's recap these 5 pain points. Lumpy income often creates a challenge with insufficient savings. Luckily, we have government assistance, but we can do that a little bit better. And then the 2 different barbells of debt. Way too much debt, not being able to get credit. Many of these startups, and this is just a handful, some of which are going to be here today, many more we hope to come in the future, are going to help consumers just more predictable, flexible income, which could then enable budgeting and savings, and then very importantly, access to reasonably priced credit. Now, the opportunity in the US is huge. The opportunity worldwide is even bigger. Let's take a really brief look. By some estimates, almost half of the world is unbanked. If we segment socioeconomically, 77% of the poor. Now, if we looked at traditional metrics like we would in the US, like how quickly are credit cards growing, we would think that this industry is not changing very quickly. Let's take something like Indonesia. Population, 250 million people. Credit card penetration, 2%. Pretty dismal. Thailand, Vietnam, not that much better. But what we'll see is that banking services in most of the world are not going to arise via branches and credit cards. They're going to come up via your smartphone. Smartphone penetration is going through the roof. 70% expected in 2020. It's not that interesting to talk about smartphone penetration anymore. It's much more interesting to talk about what are the applications or services that are going to be built on top of the smartphone. So in this case, how are banking systems going to come about? First, payment networks. You've probably heard of M-Pesa because it's one of the better known. Over the course of 10 years, it amassed 30 million users out of a population in Kenya of 50 million. So 60% of the population uses this payment system on their smartphone. Now think of all the data that you can get through a payment system on your smartphone and the apps you use, the text messages you send, et cetera, et cetera. With that, you can build a pretty interesting credit scoring system. With that, you can then layer on lending. Here's the growth of payment systems. And we talked about M-Pesa, but as you can see, it's growing very quickly, especially in sub-Saharan Africa, where the banking needs are needed the most. That's that blue bar. So once you have payment systems, what can you do? We have an investment in a company called Branch, and they do small dollar lending in Kenya. And they get your M-Pesa data, but also a variety of other interesting signals, like how up-to-date is your Android operating system? And through that, they can build an interesting credit score and lend out to a lot of the population. There are other companies that are partnering with telcos and banks. So telcos, for example, a company like Juvo is saying, give us all of your prepaid minutes data. And then they will lend out something that's zero marginal cost to the telcos, 2 or 3 prepaid minutes, and they'll see if consumers pay them back. And what they've been able to show is that the behavior of paying back with prepaid minutes can actually be indicative of building a credit score for real dollar loans. Now, we talked about the opportunity in the US, a little bit briefly about the opportunity internationally. Let's circle back to what do we look for from an investment point of view? 3 main themes. First, own the customer. It's pretty difficult, and many of you are entrepreneurs, to create an app that people use on a regular basis. And therefore, you can acquire the customer, they forget about you. In financial services, it's especially difficult. But every so often, you find a company like Earnin. And what they've discovered is that users take a lot of comfort in being able to see how much money have I earned on a daily basis from all of my shifts. Even if I'm not going to get paid until the 15th, it's comforting to know that if I had an emergency like Alice and the $300 flat tire, that they would be able to take that money out. Second theme is inflection point. And this speaks to just how difficult it is to acquire customers. Now, it's difficult to acquire customers in any industry, but especially financial services, because usually users aren't looking for financial services. Or if they are looking, like people who wake up in the middle of the night looking for life insurance, you probably don't want them. Like that's the definition of adverse selection. So a company like Propel finds someone like Alice in the grocery store as they're calling their 1-800 number, trying to do the math between their cart. And it's just a very good time when a solution like Propel is more likely to be adopted. Third main theme we think about are what are the new operating systems or platforms that will arise in financial services? Much of the world doesn't have a credit bureau. Take Branch, the lending company in Kenya. As they start to give more and more loans and build more and more credit scores, they will have amassed enough population on their platform such that you can imagine them becoming the de facto credit bureau and layering on more and more and more customer services. So let's conclude by coming back to Alice. And I hope today and over the course of the next few days have given you a little bit of a flavor of some of the exciting companies that are coming into this space to make Alice's and many tens of millions of others like her life much, much better. And there's a possibility that a few years from now, if I ask you the same question to name a financial services company that you use the most or that comes to mind, that some new brands of $1 billion of financial services will be born through some of these sectors. Thank you.